Yo, everybody, it's Friday, June 6th. Big day, big day in the stock market. Before I get into talking about the Fed and the bond market, I just want to go over something that I touched upon yesterday, and it has to do with Elon Musk and also in a broader sense, again, just kind of going over the system that we have, the fiscal system that we have, how our economy runs. It's important. And I think, it's interesting when I look at this because Elon Musk, he's a systems guy. I mean, his companies rely on systems to operate, not just IT systems, but mechanical systems, engineering. He's an engineer. And engineers rely on systems. If you're talking about Tesla, you need electrical systems, batteries, motors, generators, optics, all systems put together. Rockets, obviously, motors, guidance. These things are all engineered. Now, what people don't understand, and I would include him, obviously, in this explanation, is that you got to understand the system that the United States economy operates in. All right? The U.S. government levies taxes. The world has a desire to hold U.S. dollars. In spite of everything you might be hearing right now about everybody dumping a dollar, that's just not happening, okay? Foreign holdings of U.S. Treasury securities at an all-time record high, over $9 trillion. So by definition, the government has to supply the dollars into the system, into the global economy, to meet the demand of the non-government globally. And this is determined not by the government just spending willy-nilly like everybody thinks. Like, this is determined by the desire of the non-government to hold the U.S. currency. That's what determines it. Okay, so like by definition, because of that desire to hold the U.S. dollar, both for the reason to satisfy tax liabilities and also to net save in the currency, in the U.S. dollar, I mean, the government has to run deficits. And it's not because of the government. It's not like, hey, we're going to run deficits. No, it's because the non-government of the world wants to hold dollars. So they do whatever they need to do to get the dollars. And if the government kind of fought against that, think of it like this. I like to give you guys analogies because I think that it makes it easier to understand. Let's say you have a garden, right? I'll think of a garden. I'm looking out at my tomatoes and stuff like that. You have a garden. In order for the garden to thrive, you got to water it, you got to feed it, fertilize it, right? I mean, if you stop doing that, it's not going to thrive. So, I mean, if the global economy, if our system, and it's not even the US system, it's kind of like the global system. If the global system needs dollars, for whatever reason, that's the desire. They want a net save in dollars. I mean, the foreigners hold $9 trillion, okay? There's 36 trillion. That's another thing. The debt, the so-called debt, all that is the total dollar balances in the world. Okay, that's the real money supply, all right? But getting back to the garden, like if you don't water it, if you don't feed it fertilizers, it's just going to wither and die. And like if the government restricted, so here's the non-government of the world, they want to hold dollars, they do whatever they can do, they sell stuff to the United States, they suppress the wages of their workers or whatever, domestically, We labor, certain aspects of our economy sell directly to the government, the defense industry, stuff like that. Then that money trickles out into the economy. We acquire it because we need it to pay taxes, stuff like that. It's all very understandable, man. I don't want to get too deep into this right now because there's something else I want to talk about, but this is not hard to understand. And for a systems guy, for an engineer, like I could understand, Elon Musk is an engineer, and I could understand, like, let's say, he kind of subscribes to these ideas like we're going to go bankrupt and this and that because he hasn't really looked into it. And that is the overriding narrative that we hear all the time. So like it's normal for people, I think for regular people, it's normal to conflate their own personal finances with the government. It's just, it sounds correct, even though it's not. So he's going along that. But as a guy who ostensibly, he thinks like he utilizes the scientific method when he thinks like to test your hypothesis, to test your theories, to test your ideas. This is the thing I don't get. Like after 40 years of the so-called debt going exponential, and every single year, and now it's like every week, these warnings and these, watch out, it's going to blow up and this and that, and it's going to be a disaster and it's going to be doomsday, and nothing ever happens. And then you have situations like Japan where you're talking about quadrillions, and what, their interest rate is 0.5%. And even with the yen having declined, it's still a pretty strong damn currency. And if you go to Japan, that is a modern, extremely modern country, okay, with a very high standard of living. So, I mean, at what point does a person start to say, all this stuff that they said was going to happen, it hasn't happened. Let me think about this. Maybe the whole thing is wrong. See, like, that's what happened to me when I met Warren Mosler like 25 years ago. Anyway, I just wanted to say that. Folks, I'm starting to have now some of you are going to be happy to hear this, in kind of a, I'm sure like in kind of a ha-ha, I told you so way. I'm starting to have concerns over the bond market, and I'll tell you why. Because it's the Fed. I mean, today, for example, the job number, we had a 139K increase in payrolls. That was pretty much in line with the forecast. They were looking for 130K. We had a 30,000K downward revision in the April numbers. So like there were a lot of aspects of that job number today which showed weakness. The payroll growth has definitely slowed down. This week, we had a bunch of weak data. We had weak data in the service sector. We had weak data in manufacturing. Inflation is coming down. The PCE, the so-called favorite indicator of the Fed, that was last week, that's 2.1%, pretty much at the Fed's target rate. Now, Powell's been saying all along, we're going to be data dependent. And I've done a bunch of videos on this where I'm saying the guy is dishonest, he's disingenuous, the Fed is absolute. And by the way, 8 rate cuts by the ECB, all right? Other rate cuts by central banks. Even Japan stopped raising its rates. And I could do a whole other separate video on that because the U.S. Treasury came out with a statement admonishing the Bank of Japan, saying you better raise rates. You better raise rates to boost the level of your currency, when since they've been raising the rates, the currency's going down. I don't want to get off on a tangent. So the Fed has ignored this whole thing like we're going to be data dependent. I mean, this is getting serious now. I have to say that this is getting serious now, that the Fed is completely miscommunicating to the market or just, sending out I mean, dishonest commentary, dishonest communication. When they're saying we're going to be data dependent and you got inflation going down, you got slowdown in the service sector, you got slowdown in manufacturing, you got slowdown in the labor market, all this stuff, and they keep saying we're worried about inflation, they're going to engineer, very likely that they could engineer an inflationary impulse just by allowing bond yields, interest rates to rise because of their hawkish position. Now, I've said before, I think this is, to me, and I'm not a conspiracy guy, but it seems like this is conspiratorial in a sense. It seems like Powell really, he is doing this to get back at Trump. By the way, Trump was hammering him again today. He said they should cut by a full percentage point. And I mean, I'm just watching this, and now I got to say, like, I'm really concerned because it almost seems like they are engineering a bond market drop, okay, a yield spike on purpose for no reason. They don't have the data that would support such a move. As a matter of fact, the data, as I just mentioned, is in the direction that would that would suggest it's time to cut interest rates. That would suggest that conditions are such that you can cut interest rates. But they're doing the exact opposite. And this is also, there's another lesson embedded in this for all of you who always think, oh, the market sets the rate. The market sets the rate based on conditions. The bond vigilant, no, because conditions are favorable to rate cuts. And the reason why rates are going up or staying high is because the Fed keeps communicating this hawkish message to the market. And I think it's starting to almost shift to like, it's not even that we're going to stay static here. We might have to raise rates. I mean, they keep doubling down and tripling down on the inflation stuff when it's just not being seen. And other aspects of economic activity, like I mentioned, sectors, labor, stuff like that, inflation itself is actually moving in the direction that would suggest rate cuts at this time. So this is getting serious now. This is definitely getting serious now. And, I've never really seen this. And like I said, like my career in this business goes all the way back. If you're talking about Fed chairman, goes all the way back to Arthur Burns. Burns, Volcker, Greenspan, Bernanke, Yellen, now this guy. But this is like irresponsible. It is what it is, to use an overused expression. But now, it's kind of like we had the Trump-Musk feud. We got another one going on right now, which is the Trump-Powell feud. And Powell, to me, he seems like a kind of a vindictive, petty guy. And I said before, like, in a sense, I don't blame him when you're getting publicly, berated almost every day. But I think Trump has a reason. I think Trump is right for doing it. I mean, if you're saying we're going to be data dependent and the data is going in your direction, and not only are you not reacting to that, but now you're putting out you're messaging to the market the exact opposite of what actual conditions are. I mean, I'd be pissed off too if I was the president. I'm pissed off right now, just as, somebody who's a market observer. So like, it's serious now. It's gotten serious. And I think it's just a bad group over there at the Fed. And Powell's, he must rule with an iron fist, because I don't see anybody really getting out of line. And this is just really bad messaging. He's got some ulterior motive here. I've speculated in the past that it's either to get back at Trump, which I think that's an element of this. And also, I happen to think he's protecting the hedge funds that are short treasuries, because I see it in the data that every time we get a rally, what happens? There's large increases in short positions on the 10-year futures in the futures market by leveraged funds, by the funds. Every time it goes up, they're in there heavy selling. And then right after that happens, Powell or one of his lieutenants at the Fed, at the FOMC, comes out, makes comments about we can't raise rates, we got to be cautious about inflation, blah, 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 irrespective of what's happening with the data, which again is going in the direction of rate cuts. You can't go around saying we're data dependent and that's how we're going to conduct our policy and do the exact opposite, send the exact opposite message. I mean, that's really, really irresponsible management of a central bank. That's not what they're there for. They're there to react to conditions. It was created to react to conditions, not to set up some kind of fake, just some fake outlook. Anyway, that's all I got. That's all I got to say for today, folks. Don't fight the Fed, right? They control the rate. And this shows you right there. It doesn't matter what economic conditions are. All right? Like I said in the past, inflation could be 1,000%. If they wanted the rate at 0, they could make the rate 0. Doesn't matter. And vice versa. Inflation could be negative 1,000%. And if they wanted to put the rate at, 50%, they could put it at 50%. It's up to them. They're the monopolist. They're the rate setter. So we'll see what happens. But it's upsetting, man. It's really upsetting. Anyway, that's it for today. It's Friday. Enjoy. I skipped my sparring session tonight because I had to get some new tires for my truck, so that took a long time. And so please like and subscribe. If you've done that, thank you very much. And don't forget, go to my website, pitbulleconomics.com. Sign up for a 30-day free trial to MMT Trader. I'll see you guys. Bye.